Good morning, everyone. Sorry about the delay. Had a little bit of technical difficulty again here this morning. Welcome to our Wednesday morning trading room. It doesn't look like we missed very much, though. The market's off to a little bit of a soft start here this morning. After yesterday's big sell-off, took all morning to come around, but when the market finally settled in on a direction, it was nothing but lower prices for the remainder of the day, especially going into the close. The market really put it in gear. Here for you eagle traders who like to trade the first in sync signal of the day, we've got that going on right here. And basically that's just, the first signal. Our bar, or pardon me, trading band is bullish. We do have an opportunity at a second push entry on this one. You could even enter above the close of this bar up here at 56.96.5 in order to flip over the ATR as well. So there are a couple of options available to you. The market looking like it might be in for a rally, maybe, try to recover some of yesterday's decline. But there's that first eagle in sync signal I wanted to point out to you. We'll see how that one plays out. It's still very, very early. We're only a couple of minutes into the day. I don't usually like to take a trade too early. So we'll see whether the sellers actually can follow, pardon me, if the buyers can follow through on this. Usually what I like to do is I like to give the market, I don't know, 15, 20 minutes, just kind of get its bearings. The temptation, of course, is that right out of the open, the market's going to have a lot of momentum, right? Okay, let's get here to the Raptor. I know we've got quite a few Raptor traders in the room. The Raptor, a little bit of a jumbled mess right now. I don't know if we're going to get a cloud crossover signal here forming, but we've definitely produced a hard edge bounce signal right here out of the open. About the same time that we've produced that eagle signal. All right, so they're flip-flopping here a little bit. I'm working on a possible first micro macro cross lower here now on the hawk. My stops might actually be a little bit tight here because there is a little bit of a gap from where the market left off. A stop down here, 56.70, would have been better, but unfortunately that's going to be a little bit out of reach for me. And it looks like I'm going to get tapped here on that first eagle signal. So this is rare. The first eagle signal actually has a very good record of following through. Let's see what it did yesterday. Oh, sorry, there's the overnight. Let's see what happened with yesterday's first eagle signal. Oh my goodness, what a mess. Well, I guess yesterday we didn't get the follow through either. The signal eventually would have worked out, but there's no way I would have been able to ride out that much of a pullback before the market finally took off. So, most unfortunate. All right, well, I dug myself a hole again, so I've got to get out of the hole first and then try to make a little bit of money. I still think I had the right idea on the trade. Unfortunately, as I mentioned, it might have been a little bit tight with my stop given what I needed the market to do. So Tony says that my support and resistance values are different than his on the support and resistance lines. So I just reloaded those so we could see. Is that any better, Tony? By the way, we're getting a crossover signal now. You could trade it below the low as well. That gives you maybe a little bit the opportunity for a slightly tighter stop. Don't worry about it today, Tony. Mark says that my lines are the same as his, so yeah, it sounds like the problem is on your end. You could also try reloading historical data if you haven't done that one yet. All right, let's see what they're going to try to do here to the short side now, if anything. Oh, quarter to the hour, my favorite time to trade. Not really. We'll see if this trade changes that perception. Markets tend to give a screwball signal around quarter to the hour. Oh, of course. Let's run up to the hard edge now. They're going to tag me here in a second, too. Hey, okay, well, that's 2 for 2. Two good signals that should have worked out that haven't. Usually when this happens, I start to question what kind of day it's going to be. All right, well, we are in scalp mode. Big surprise there. Moving into swing mode in a couple of minutes' time. Okay, I'm going to put the brakes on everything here in a second. Pardon me. What I'm going to do now is I'm just going to wait for a little bit more structure. Tried 2 trades, the market wasn't interested in either. So when this happens, when you take a couple of losing trades, try to remain calm. Make sure that you have your risk contained. We want to make sure that we're trading only a certain amount of our capital. We also want to make sure that we have our safety net, if you will. Oh, we're getting a hard edge bounce signal here as well. So, I'm way far away from the entry on this one. Come on, give me that second push. This is no doubt a significant level of support. My goodness, 56.77. Oh, well, we're back here at that 50. I think 5,700 was a little bit of a stumbling block. Oh, but that's way up there. Really, now we're coming back with a counter trend signal. The problem this morning is the sideways nature of the market. It's really, really difficult to get a handle on which way the market wants to go from here. If you're here, I'll show. Well, hold on there, market. I'm going to show people something. You could do an OCO. You could buy above here. Stop it. You could do an OCO. I'll set the sell order first. So we could sell below here. We could buy above here. Why those price levels? Well, here we go. The counter trend signal and the hard edge bounce signal, coming back with yet another hard edge bounce signal, have produced a very, very tight little sideways range. This market is really stuck. See, look at the selling that's coming through here now. And right back to 56.77. Okay, let's enable our stop strategy here. This is twice this morning I've done a trade at 56.76. Oops, let me resize this. There we go. All right, here we are at 56.70. This is yesterday's lows, or these are like yesterday's lows. Just looking for my next stop strategy. Maybe we'll try the super trend today. There we go. You know, the way the market fell off yesterday, that huge decline, it used to be if the market had a big rally day, and when I say rally, it, either higher or lower, you could count on a couple of days of follow through. Not anymore. Now it almost seems like if we have a strong rally day, the next 2 or 3 days are just going to be nothing but chop. All right, well, got tagged on that little bit of a reverse, but picked up a couple of dollars anyway. The hole is a little less deep. Andres asked, Eric, don't you take profit when opening OCO orders? You can certainly set a profit target. With mine, my parameters are currently set at a 50-50 split. So I believe the software, if I'm only trading a single contract, turns it into a runner. But you can always manually set a profit target as well, right? You can right click on your chart And you can set, for instance, if I set an OCO order to buy here and I get filled, buy there, sell there. If I get filled, I can always manually set a sell order for a profit target. And these are live once you put them on your chart, so you can drag them about. And likewise, I can put in a profit-taking order here at the bottom. So you can, like I say, you can always do that manually as well. But I was hoping maybe to run this one out a little bit. Didn't really work out that way. But that was the plan. And getting a lot more bearish. This, again, an instance where we could have seen a number 3 signal produced. That's the hard edge bounce. I would consider this close enough to the hard edge to be a hard edge bounce. See if I get a second chance on any of the other tools. The eagle producing just a continuation signal here. Wow, what a chop fest. So Trade Forecaster says we are in swing mode, and it is definitely swinging. Again, really, really tough to kind of get a handle on what kind of day this is. I mean, our price is going to head lower. Are they going to try to recover some of yesterday's session? We're getting some sell-off, right? We're getting some sell-off, but it's not sustained. We get a little bit of a pullback, sure, but this should have had more follow-through to it, don't you think? If it's a seller's market, oh, and there's the counter trend signal. All right, so this is getting violent now. The buyers and sellers aren't just nudging each other about anymore. This is turning into more of a street brawl kind of ordeal. The number 2 signal, the counter trend signal, occurs when A, you have a trend, and B, you have a test of the extreme. In this case, the extreme is the low, and then a subsequent failure. The failure suggesting the market is going to try to change direction. Now, I'm being a little bit more aggressive on this position than I normally would. Usually counter trend signals I only do with single contracts because by their very nature they are a lot riskier. But we'll see if I can't run one of these out. See, so today if I had sat out opening range, if I were smart, well, no, I shouldn't say that. I shouldn't say that because um, the vast majority of the time, those first in-sync eagle signals actually work out pretty well. And today, is probably going to be another one of those kinds of sessions like yesterday's where the first in-sync eagle signal, right here, our buy signal, will work out, but we're going to have to ride out a whole great big drawdown first. So maybe, it's of course too early to tell, but maybe the market's going to get up here and rally anyhow. Okay, so we hit the first profit target, hooray. I got a runner in on this one with a break even now, so we can try to hang on here a little bit. And where is my stop going to be at? Okay, the super trend is pretty much sitting at break even. People are always wondering, hey, Eric, what's the best stop for me to use? Well, there really isn't a best stop. What I do is I open up the chart, and if it looks like the stop strategy is following the market reasonably well, I'll go with that stop strategy. I can always adjust my stop strategy as the day progresses or as the trade progresses. So as I get more and more open profit here, I can go to something a little bit more aggressive, maybe like parabolics, which are at the moment sitting pretty close to where the super trend is at, or the ultra aggressive bar high low, and maybe I'll get that one ready in case I need it. See, the bar high low would have us right here below this bar. And the parabolic's now also becoming a little bit stronger. So you see what I mean about that first eagle signal? It was actually correct. The market was going to put in a good rally today. Unfortunately, they decided to do this pullback first, just to tag those traders who had their stops below yesterday's low, which, guess what? That's where I would have put mine too. So I guess it worked out for the best that I had my stops in a little bit tighter, took the earlier stop out, lost a little bit less money. Now here's the challenging part with the super trend versus the parabolic, or perhaps the bar high-low strategy. The parabolic stops right here, the super trend stops get a little bit more liberal, give you a little bit more room. As we get closer to 5,700. This is a very late cloud crossover signal coming. I guess the programming interpreted this here as a pullback. And the parabolics now with their stops right here at around the 56.88 mark. Do you know where swing traders likely have their stops? Way down here. I don't know if I could do that. What do we have in open profit? Let's see, $350 in open profit right now. I don't think I could do that. Plus the risk position down here, another $200, so you essentially have $500 in play. That's kind of bordering on my comfort zone. All right, so here comes that pullback now as the #1 cloud crossover signal forms more correctly. We should see a little bit of a deeper pullback, and then the market come back with a continuation signal. But I think I'm going to get tagged here in the meantime. Oh. Here, let's push it up with the mouse. I hope it's not too late. Get up there. Get going. I'm using all my strength to move the market higher. Nope, got there too late. All right, good trade all the same though. And I think I have now dug myself out of my earlier hole. Hooray for me. Let's see, where was that last execution? All right, so if it wasn't for my earlier antics, I would have, my day would be done. Well, actually, if I'm doing my 3 trade quota, my day would be done as well. I've done 3, excuse me a second. Sorry about that. I've done my 3 trades. I'm finishing the day in profit. I think currently I'm up about $150. So my day would be finished. Now that I know that doesn't sound like a lot of money, but again, when you take multiples into consideration, when you start trading more than one contract, of course, the effect becomes compounded. Steve wants me to play with crude oil. We got crude inventories coming up here shortly. Here is crude oil this morning on the Raptor. Pretty crazy looking chart, actually. I don't know what to make of this. Normally, going into crude inventory, I like to see the market a little bit more congested, a little bit more sideways. This is the morning session, by the way. That's all that crude oil has done this morning. That's kind of crazy. So the market looking a touch bullish right now. The clouds have crossed. We've had a cloud crossover signal in the wee hours as well as a continuation signal this morning, but so far not much in the way of continuation. We'll come back to that in about 10 minutes time as we get a little bit closer to inventory. So things looking a little bit more bullish now as we saw that run up in the Raptor. Tony makes the comment that the daily chart on the NASDAQ really looks like a correction is taking place. Hold on a second here. I will build you a daily chart and we will all see. Okay, so here we are. Yesterday's day is huge. The day before, huge. These are putting a very, very bearish spin on the market right now. Now, the NASDAQ, you know, the fib traders are already pulling their fib lines, trying to figure out how low the market's going to go. I don't think it's that easy because if you look at a continuous chart, this rally goes way back. You know, the history of this is just goes back a long, long time. But the fact that this market on the daily anyways opened up here, closed this low, then the next day we open on a gap down and push into the close, these are very strong bear signals. I don't know, I'm just trying to get a read on this. Some traders will draw a kind of a shallow trend line here over the last two corrections. So there's obviously some buying going on here off of this trend line support. So if they get through the lows of the day, this 56.70 area, very, very important, and now you can see why. All right, let's put that away. Oh, darn it. Here's that number one signal that I was waiting for. Thanks, Aspen. Aspen making me feel a little better. He says it went so fast he couldn't get a hold of it. I imagine the sellers will try to knock the market down again a little bit as we get near the high of the morning, around 5,700. Currently, we're contending with the primary resistance line, around 56.95 half. Maybe that will result in another hard edge bounce that we can try to buy. Okay, we've also produced a first micro-macro cross right at the same level. Now this trade does have a high probability of success. You're going to need to cover it very, very deep though, at least to this swing low right here. I'm going to hold out, see if perhaps it's going to give me a 4-arrow consolidation. That's what we saw happen here. 4-arrow consolidation, by the way, is the only signal I will take on a yellow bar in the hawk. Sure, Elmer. Elmer asks, Eric, when you have a minute, could you show or say how to put on the setting in place for the case of jumping in with a market order? Well, the market order, the simplest way to buy or sell with a market order is just to use these buttons right here. If you want to use your trade parameters and you want to actually set up your trade like this, what you want to do is you want to change your order type. So by default it is a stop order. However, you can also select a market order. And then let's say you set up your trade this way. You need to be aware as soon as you hit this submit button, even though your order is initially up here, it's going to go to whatever the current market price is. So in that respect, it really doesn't matter where you set up your trade, because once that submit button is hit, I'll automatically get filled at 56.93 half, because that's the current price. But if you want to ensure that you have a profit target in play and a stop loss, that's an easy way to do that. But as I said, the simplest way is just to hit the buy and sell market buttons. You can always add a stop simply by activating your stop strategy and clicking accept. Accept, and then even though you have entered the market this way, Trade Manager will automatically give you a stop at whatever your selected stop strategy is. If that's not what you were asking, Elmer, let me know. So Elmer asks, so with the buy and sell buttons, which target and stop is used? Well, if you have an active stop strategy, that's the stop that's going to get used. So here's a number 2 signal. If I hit the sell button, it's automatically at my stop, and it's set up for whatever this risk amount is. So you can see it says, oh, Eric, you can afford 3 contracts trading this way. If you only want to trade singles, if you don't want it to, go crazy and get you in for your 2%, then go to manual mode. Let's see if we can't let this one get back. See, the other dot was behind the number 2 here. No. A good way to learn all these things too, folks, is just to play with the software a little bit. Okay, here, I'm going to have to close this out because we're actually going to be getting a continuation signal here in a moment. So this is like our number 3 signal now, which I would be interested in taking. Okay, and I do get a second push on this one. And I can take it two swings back. So what I'm looking at here is perhaps a market that is going to continue with this uptrend. So we've had the trend change signal, a little bit of a follow through. We're seeing a little bit of a reaction now to the resistance line, but the market is retraced back to the hard edge. And even though it's a couple of ticks short, it is still close enough for me to consider it a hard edge bounce. So I would be looking for a possible continuation here. And I guess we can get a little bit more aggressive now with the crude oil market as well. So here's crude oil. What a terrible, terrible range to try to trade today. I'm looking for a kind of range that I could bracket one way or the other and use an OCO order. The short side's not so difficult. I would short below, probably below the primary resistance line. I don't want to enter up here. That's too far away. That's, well, $300. I suppose I could enter above yesterday's high. Or I could let the inventory report break and then trade it. All right, well, let's see here. I can do a sell order, and I'm going to use a sell stop limit. I want to contain my risk, and I'm going to keep slippage to 2 ticks. What's going on here? Where's my sell limit? Here's my buy stop limit. Where's my sell stop limit? Doggone it. All right, well, there's the report. So I guess we're going to go with plan B. Let the report release, and now, okay, we know here's kind of the low. I'm going to have to just go in with a limit order. I can't do otherwise. Or not a limit order, Eric. Doggone it. Where's my sell order? All right, I have to do it this way. And where's my sell order? Doggone it. I'm not short from 3056. What the heck? All right, well, I can at least tell you how things would have worked out here. So because the market didn't give us a really well-defined range to start, you can always allow it to have the inventory report come out, and then you can bracket that range. About 30 seconds into the report, you're going to get kind of this little range develop, and then you can bracket that higher or lower, and you can see that in this instance it actually would have worked out pretty good. I'm sorry, I don't know exactly what's going on here, but the principle still holds. Okay. So I apologize for that. I'm going to have to check that when I have a moment. Okay, so our buy, our hard edge bounce worked out for us as well. And we're getting some pretty good follow through on that signal also, which is nice. So some of you are probably wondering, scratching your head saying, well, Eric, why did you not take the counter trend signal? You could take the signal. Aspen, for instance, will take the signals regardless. You get a number 1 signal, he'll buy. You get a number 2 signal, he'll sell. And that's fine. At the end of the day, when the dust settles, everything should work out in your favor. However, it's okay to bring common sense to the table when you're trading. It's okay to think a little bit. We don't want to go go crazy with our analysis, especially if we're not sure what the market might be doing. But we had this very strong run up, came back with a number one signal, run up. So everything is looking quite bullish right now. Now all of a sudden we produce a counter trend signal, but there isn't much of a retest, is there? Just a tiny little stumble right there. That's probably why the market did not retrace, and even if it did retrace, my target is the hard edge. That's barely enough for a scalp. So that's why I was a little bit more interested in the continuation signal, in that number 3 signal. And again, we only came within a couple of ticks here of the hard edge. That's the only reason the number 3 signal did not print on this bar right here. But you should be able to recognize it anyway. You should be able to see it coming, which is what we were on the, or what I was on the lookout for. Okay, getting a little bit of a retracement now. Not a bad morning today. Not a bad day at all. Oh, I see the problem. For some reason, my crude oil trade went into the natural gas market. What is with that? Okay, that's odd. That's uh, that's a new one. I'll have to ask Ben about that. Okay, so Mark says on your crude oil chart, check your chart trader properties. All right, so I believe that's under the data series. No, what's that under, Mark? Oh, I know I've seen it. I can't place it right now. Oh, down here. Duh. Okay, never mind. That's not the right box either. We'll check the trade manager. Oh, there it is, the input series. How did that happen? When I checked it before, it said crude oil, honest. Okay, so here's an easy fix. Remove it and reinstall it. I already have my templates, so it's a simple matter of reinstalling it. That's what happened there. I pay attention to that now, though. Ever since Russell pointed it out to me the other week, I pay attention to the input box. And it did say crude oil, because that was the first thing I looked at. But I will let the powers that be know about it, because that's twice it's happened. Yeah, Mark, I'm not sure how that got switched either, and yes, it is definitely weird. Like I said, the first time it happened a few weeks ago with the E-mini, I didn't give it a second thought. I thought it was just one of those things. This is the second time it's happened, however, so I will definitely let Ben know. It's an easy fix, but it shouldn't be happening, of course. Yeah, that could be it too, Ryman. Ryman says, Eric, I remember there was a member asking something on natural gas. Maybe you changed that on the chart. And that can do it too, flipping back and forth between markets. Sometimes there's a little glitch somewhere in the software and it doesn't change everything over. But I would say we are in a buyer's market here this morning, boys and girls. The NASDAQ in particular looking to make a little bit of a recovery. They've got a long ways to go. I don't know how high they're actually going to get today. Like I said, the tendency is, or used to be, that the market would rally for a couple of days, but now it seems to be, oh, let's rally one day and let's just go sideways for 2 or 3 days afterwards. So while I am bullish, I don't know if we're going to get much higher than the, let's see, where's the next resistance zone? 57.17, 57.20. I do believe those numbers were important yesterday afternoon. A full-blown reversal would see the market go well, certainly yesterday's highs were up here around 57.70. I don't think we're going to see that. 57.40 would be huge. I'm not sure we're going to see that either. But 57.17, 57.20, that definitely looking feasible. All right, ladies and gents, I've actually got a meeting at the top of the hour, so I hope you'll excuse me for closing the room a little bit early. And I will see you again tomorrow. But be careful out there. You know, like I said, you want to stay to the long side for now until you get a serious retest of the lows. Look at them go. There it is, 57.17. All right, we'll talk to you tomorrow then. Bye for now.